Hello traders, Gary Wagner here just after 12 noon in Honolulu, 5 o'clock in New York. It is Wednesday, 8th day of January 2020, and this is the daily report for gold and silver. To say that the last 24 hours have contained extreme volatility in gold pricing would absolutely be an understatement. Beginning last night with a missile salvo into two Iraqi air bases which contained U.S. troops, we saw this market run up to about $1,613 per ounce. Once it was disclosed that there were no casualties, either Iraqi or United States, and minimal damage, we saw gold prices break back below that. And then the statement by Trump this morning, 11 o'clock Eastern Standard Time, sealed the fate, and we saw gold go dramatically lower. Yesterday, we did do a couple of things. One of them was to raise our stop up to 1573. We also suggested an aggressive trade in which you added on to a position. We'll cover all of that in detail, but we did come out in either case with a very nice profit, and we have gold substantially below the point that we got out. And we'll talk about that as we pull up our technical studies. But first, let's take a look at closing prices. Gold closed just $4 off of the intraday low achieved when President Trump made a statement which in essence said that we are de-escalating. There will be no retaliation for the missile strike that occurred on Tuesday evening by Iran. As you can see, 1557.50, that's current settlement price, down about a full percentage point, but considering the intraday high of 1613, we had quite a extreme range over the last 24 hours. That being said, we did send out a special trade alert. We recommended adding to the position. We also recommended that we move all of our stops up to 1573. We'll go through the details as we pull up our technical studies, but in all cases, we were stopped out and stopped out with a nice profit. Platinum down about 1.3%, closing at $958.30, a decline of about $13. Palladium, I feel like a broken record, a new all-time record high, $2,066.20 after a 2.5% increase, approximately $52. Silver lost about 1.5%, down 26.27 cents at 1813. And the dollar did have some strength, so it did provide some headwinds, up about 33 points, back over 97 at 97.05. Let's take a look at our technical studies. I have been charting and studying the markets on a technical basis for about 30 to 35 years, and nonetheless, yesterday's activity, in fact, the last 72 hours, have really been something that has had me shaking my head because it's something that I haven't seen. In terms of what we've seen on a daily candle, we had, as we talked about the other day, we had a shooting star, not really a hangman because it doesn't meet the criteria exactly. The tail needs to be longer, first of all, and there should be no upper wick, but nonetheless close to that. And then the candle that we saw yesterday and today, this daily candle with this extreme high at 1613, extreme low down here at 1553, is significant. There's no question about it. This was a headline-driven market, and what we saw last night was as follows. On Tuesday evening in New York, which is about 12 to 1 o'clock here in Hawaii, there were reports that surfaced that Iran had launched about 12 missiles to two air bases that were jointly occupied by both Iraqi and U.S. troops. That sent the market on a flurry to the upside. That is when we hit these highs at approximately 1613. As the market was moving up at around 1590 to 1595, we got the reports, and I did a couple of things. I sent out a special trade alert. I recommended that we trail our stops up to 1573. I also suggested that you could add a position. You would have added that at 1595. Now, when the market came down, of course, it did stop us out, and it stopped us out before Trump actually came out this morning and spoke. We got out at 1573. So for those that did not add to the position, the profit on that was about $6,500 per contract. For those that did add it, it took the profit down to about $4,500 per contract. So in either case, we did pull a profit, and now the question is, where from here? Are we going to see a much deeper retracement, or is it a one-and-done type scenario? And for that, we really have to create a current Fibonacci retracement. As you can see, I have created a Fibonacci retracement that really covers this last leg of the rally, roughly from 1450 up to the highs last night at 1613. And of course, the one area we absolutely needed to follow was last year's high, which comes in at approximately 1565. And we can see that we decisively saw gold take that price point out, trade dramatically lower, and close near the lows. So the next real area that we want to take a look at is the 38% retracement level. That comes in at 1551, so about $6 from here. And then below that is about 1531, and that is the 50% retracement. I don't think we will go much deeper than that, but if we do, the one thing that we might want to look at is the 0.618% retracement. However, that comes in at a point that I don't think we will see this market drift to, and that comes in at about 1512.30. I've just kind of added that to the screen. So these are the price points if gold continues to trade under pressure that we want to look at. We also want to see if there's any correlations with recent tops. As we talked about, we did take out 1565, so the next key level we would look at comes in at about 1540 to 1542, and as we can see, that's kind of in the middle of these two retracement levels. So the top below that comes in at around 1520, and that is a pretty aggressive area because we have lots of historical data that really support this as an important price point. So if we see it drift lower and break below 31, we do want to see what happens at 20 and then at 12. But these are the various areas that we want to look at. For right now, we do want to let the dust settle. We just pulled profits on our last trade, and this is still a very fluid fundamental event. We could see a further de-escalation, or the opposite could happen. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Thursday for the next daily update and review. Bye-bye.